All right, guys. So in today's video, I want to talk about understanding the origin of price movements and understanding that within the context of the trading range and how to use that to filter out the noise of volatility in the markets. So we'll start on the high time frames and work down to the low time frames, but essentially, and it's going to be different for the lower time frames, but on the higher time frames, you see this point of origin right here. And that's essentially where, the sell orders basically hit the market to start the impulsive move. Um, it did start here, but you could also define it as being right here as well. Um, so essentially, price comes up, reacts off that level, but then ultimately reclaims it, and it's the reclaiming of this level that changes the structure of the market. Not necessarily here, where a lot of people would be looking at a reclaim of this level. I would be looking at, reclaim this point of origin. Something different's happening. You can see that here as well. So here it didn't really matter, but essentially here's your point of origin. When this level is reclaimed, price moves aggressively upward. So essentially your range here after this movement, right? You have a range within a range, right? So you have this range here, this swing low to this swing high, but then within that range you have this range here. Um, a lot of times what will happen in the market is you know, this level will be reclaimed, and then price. Again, it didn't happen here, but sometimes price will hang out in this region and accumulate near the highs, and that's typically a phase in the market where people are going to get tricked into entering short positions because really it's this level here that we want to pay attention to, and then you have your parabolic rise in Bitcoin. Um, yeah, again, so here price reclaim this level here. There's your point of release, right? So it offered a reaction off there a little bit, but then gave resistance to that level. Once this level is reclaimed, then you get an aggressive move. Same idea here. So essentially you have this point of release here. Price comes up, hits it, reacts off it, sells off, but then ultimately reclaims it. So again, it does sell off after reclaiming it, but in the big picture, you see this and you see, okay, well, price is going to run upward and fill this inefficiency up here, which is exactly what it did. Then you have this C price. It does have a little bit of staying power. Price will run back down into those levels. Um, Here again, you have your point of release here. So price comes up to this level, reacts off it, and then you know at this point, you don't really know if it's gonna sell off that level or how much further it's gonna retrace. But then you see this candle here, reclaiming it. Again, this is the level where people, most traders are going to be looking at this high, right, waiting for this high to be reclaimed. But you can, if you want to be ahead of the curve, you can look at the point of origin here. You know that this has been reclaimed. Liquidity is probably going to get ran above these highs right here. And that's exactly what we see. Again, you see some pretty aggressive movements down here. Here's the exact, the opposite to the flip side. So you have your point of release here, creating new highs, but um, once this level gets reclaimed right here, price moves lower. Now, if we go down to the low time frame chart, so essentially, like in the context of current price action, so you have your point of release here. Maybe we could see it better on the hourly. Yeah, it's much better seen on the hourly, right? You got a very clear level here. This is where the orders started hitting the market. So if price were to, reclaim that level, this would be the area I'd be looking at personally. Like if these highs get reclaimed, then all of a sudden this becomes a swing low formation right here. So you have this very distinct V-shaped swing, and a lot of times once this point of origin is reclaimed, that will become a clean breaking point right here. So essentially price may run up and then retracing that level. And then, that's where the market kind of changes around. And again, it hasn't happened yet, but it's just something to keep an eye out for. Let's see if we can find some areas where it's already taken place. Let's see. Yeah, so essentially you see that right here. You get your point of release right here. Price comes up, reclaims that level, sells off. So we can also just look at the inverted chart, so you can see it very clearly here as well, going back to what we were talking about earlier. So you have your point of release here. You go up into that level, sell off, but then ultimately when you reclaim that level, that's when structure is broken. Same idea here. Here's where the bids really hit the market. Right at this level right here. Price runs up into that level, offers a tradable reaction. But once that level, or the highs, typically the highs associated with that level as well, are reclaimed, then market structure is shifting around. People are getting caught off on the wrong side of the market, and it moves against them. Let's go further back. Let's see this shift around right here. This is October of last year. You can see right here. So you have your very clear point of release right here, right? Bids hit the market right at this level right here. Get your impulsive move down. So this is kind of what I'm talking about by identifying the range, the context of this range. So price is just operating within this range. So it's easy to get caught up and turned around if you're playing price movements within the range, right? So if you're looking at this and thinking, well, the the higher highs, therefore I'm going to get long here and look for higher prices. Well, it's not taking into account the greater liquid range right here. The greater liquid range, right? Once this gets taken out, then that's when you get your impulsive move upwards. Let's see if we can find one more example here. Let's see. I'm primarily looking for examples just to the upside, just because they're easily to find. Let's see if we can find the breakout from the. Here we go. So here you have your sell orders hit the market right here. Price moves aggressively down. When price comes up to that level, it offers a tradable reaction. Again, at this point, we don't know, what way price is going to go, but it's when price reclaims these highs that things start turning around. And it does make a few pushes lower for liquidity, but once you see that distinction, then you do see price turn around a little bit. Same idea here. Price runs up. So, sometimes you can get, and even on the micro time frames, right? Like this would be the same thing here that you're seeing on this time frame. Just this would be more visible if you go down to like a 5-minute chart. It's the same exact pattern, right? Same pattern here. Run up above this, down there, run up as you have in this greater swing here. Run up above these highs, run down, and run up. So that's kind of the fractal nature of price. And a lot of times you'll see, price run up above liquidity, grab liquidity, and then start pushing a little bit lower, running liquidity to the downside before ultimately moving in the other direction. Anyway, I hope you guys like this video. Just make sure to like the video and subscribe to the channel.